We do want to talk a little bit more about the broader tech market moves today, starting with the big dog moving up the Magnificent Seven. Nvidia shares jumping after announcing that it's launching 3 new graphics cards. Meanwhile, Piper Sandler says Nvidia's GPU capacity build foreshadows growing data tailwinds, thus potentially ushering in a new data renaissance. Piper Sandler citing this as part of key themes to watch for application software. So here for what may be in store for cloud applications and analytics this year, we have Brent Bracelin, Piper Sandler Managing Director and Senior Research Analyst. Brent, thank you for being here with us. We're going to dig more into the specifics of cloud names specifically, but starting on this chips news coming out of CES from Nvidia, I wonder if this AI renaissance that we mentioned before, is that baked into the market already, or do you think this news gives us a renewed reason for more market euphoria around some of these AI names?
Listen, I think 24 is going to be a little bit different in that AI is known. AI is clearly driving a lot of stocks, driving markets. Our favorite AI play obviously is Microsoft, but that's very well known and very well appreciated. What's less appreciated is going one step further. Who could benefit from AI that might not be fully appreciated. And so that's where we bring up folks like a Workday. That's where we bring up folks like a Snowflake. So there are additional folks out there that in that application space that we think will actually be indirect beneficiaries. Clearly, all of the attention is being played to the Magnificent Seven for good reasons. But we think there's a broader opportunity out there for investors willing to take a little risk.
And Brent, great to see you as always, my friend. When you talk about application software, just as a vertical, Brent, I'm just interested, why are you bullish into 2024? What are the reasons for optimism?
Yeah, good question. So you have to understand the last big cycle for these cloud software companies actually happened during the pandemic. There was a forced move to accelerate, pull forward your cloud investments because of remote work. And so you had this huge acceleration in spending on the cloud application space. Unfortunately, the last 2 years have been tough. So we've had a lot of cost optimization, moderating growth. There were over 40 cloud software companies growing over 30% back in 2021. If you fast forward to next year, there's only 4. So growth is scarce again. We think we're entering a whole new investment cycle for these cloud application companies. This time it's really driven by the need to move these applications, these old applications where your data is locked up in on-prem software. You got to modernize to unlock the data and open up some new AI opportunities. So we're at the beginning of what we think is a big generational investment cycle. We saw one for a blip, a little bit of a bubble in the pandemic. We're about to enter a much more meaningful cycle for cloud applications.
So given that we're about to enter this cycle, what should investors know about how to suss out the opportunities associated with each individual name that you ran through there? Should they be looking at fundamentals, at technicals? What are the specifics? What on the balance sheet should they be looking at to determine where to go in these names?
Sure. So what we're looking at right now is a little bit of a combination of both an approach towards GARP, growth at a reasonable price, as well as taking on a little bit more risk with what could be a generational company. Let's put Snowflake in that really high multiple, but has the potential to be a generational stock in this whole AI era. Has more risk, so understand that is a slightly more risky investment because of the premium it has. But again, there's not that many generational companies out there. On the other hand, we think there's great opportunity to invest in growth at a reasonable price. Companies like Workday software that you have a new leadership team that has done a really good job of focusing that business. There's several new partnership and product announcements coming this year that we think could stabilize growth in the high teens, and more importantly, similar to what we saw at Salesforce this year, drive meaningful improvement in margins as that business approaches $10 billion scale. As it relates to smaller companies like a Monday, this is another very interesting company. It's viewed as a company that might be viewed in a competitive space, but they're really separating from their competitors turning into a multi-product platform. And that's a company where we think we could get both a re-rating on the multiple as well as a fundamental improvement acceleration in their business. So it's a combination of both. It's going to be a very different year, 2024, than 2023. It's not just about the AI hype. I think there's a much bigger, broader set of opportunities looking at this group in the next cycle.
Brent, I want to get you out on this. So we know what you like, Brent. Workday, Snowflake. Here's a name you don't like, and I want to get your reason on it. Unity Software. You got the equivalent, I think, of a sell on that one, Brent. And I was just talking to Madison about Apple, the new headset. We know, Brent, I think Apple's working with Unity Software on that headset. Why is that a sell, Brent, in 2024?
Yes. Unity is a very unique company. We think it's got a very differentiated mode as it relates to technology. But the challenge is they've really doubled down on the ad network part of their business. And so it's a much larger advertising business. They're going through a leadership transition, which adds execution risk. They also tried to raise price too aggressively, and the game developers push back. We don't think the changes they've made will actually have a positive impact on their business in the near term. We actually think there's more downside than upside risk, particularly given a lot of the optimism now being generated ahead of this new Apple device cycle. It's going to be too small to even matter to the numbers, but now the multiple has a premium here that might be unjustified relative to the timeline when it will actually have an impact on their business. So the ad business is struggling. I think it will continue to struggle in the next year. Even though it's a great company and a great franchise, might not be the right time to buy it.
Brent, always love having you on the show. Thanks for the insight and the picks.
Take care.